20,000% gains in free cash flows? Sitting at just about the midpoint of its 52-week range, this chipmaker's been pulling in larger and larger gross margins as it experiences further fortification of its position in the market. In the worldwide chip shortage, we're seeing plenty of industries being squeezed, but in the case of Micron Technologies, we're not only seeing growing opportunities for the short term, but also sustained expanding margins over the long term too. Micron's one of the leading suppliers of memory and storage used for all kinds of products, including smartphones and data centers. They just dropped their year-end earnings, and so while we're looking at that, I'm going to break down why I'm excited about this investment. We'll start by looking at who they are and where they fit in the industry, and we'll continue by looking into the numbers. Finally, we'll finish with some of my concerns, as well as a discounted cash flow analysis, and a look at what a bunch of the other analysts are saying too. As usual, feel free to use the chapter timestamps down below. Welcome to Benevolent Investors, where our aim is to grow our investments wisely so we can bless the crap out of our communities through generosity. Micron Technologies is ranked number 3 in market share for total memory and storage shipments after Samsung and SK Hynix. With an $82 billion market cap as of filming, they're just a little bit smaller than companies that sit in a similar space like AMD at $123 billion. It's not really apples to apples, but just so you know. Texas Instruments at $179 billion. And Analog Devices, ADI, at $92 billion. The worldwide chip shortage and increasing demand for smart, basically everything devices has brought increasing pressure on the computer parts industry. Spiking demand for smartphones, data centers, autonomous vehicles, and AI are all continually raising the tide for demand on DRAM and NAND, which Micron specializes in. Simply put, DRAM is the simpler type of RAM that is what they call volatile, because it resets when the computer is restarted or the power is turned off. Basically, RAM enables computers to do a lot of tasks well at the same time, supporting the CPU. NAND, on the other hand, is non-volatile, so it's used for storage of files like on this micro SD card or on your smartphone. While traditional spinning disk hard drives are cheap, their days are basically numbered, and solid-state storage, or SSDs, are replacing them, including DRAM and NAND, and this demand is expected to increase for the foreseeable future. Data centers are now the largest market for memory and storage as cloud services are exploding. Speaking of SSDs, one of Micron's brands is a well-regarded brand called Crucial, which I've used and I enjoyed. Check out the 5-star reviews on Amazon, dude. High-quality stuff they're putting together. If we break down revenue into business units, we can see that compute and networking units make up the lion's share of revenues, and we're seeing a solid 15% quarter-over-quarter gain, with a 26% year-over-year change there. DRAM makes up about 3/4 of Micron's revenues, while NAND makes up the other quarter, though this is expected to tip up little by little in the coming years as things shift over towards NAND production increasing. The industry outlook they provided reflects DRAM's demand growth to continue in the low 20% range in this coming year, then in mid to high teens in the years after that. NAND is showing stronger potential, with expectations of 30% demand growth in the coming 2 years. So now that you know a bit about how much this company is growing and what their core businesses are, let's take a look at the bigger picture figures. Revenues were up 11% quarter over quarter and 37% year over year, looking at the just completed fourth quarter. Now, on an annual basis, revenues are up 29% year over year, which is still pretty impressive. Zooming in on their core product, we're still fortunately seeing single-digit growth, but the most notable point on this slide is that the average sales prices, or ASPs, are still also growing. I'll touch on this a bit more when we're looking at concerns for the company in a moment. They have forecasted that in the next fiscal year, DRAM revenues will continue to grow by 38% year over year, while simultaneously becoming a smaller portion of their overall sales as NAND demand grows. NAND also saw growth in shipments and ASPs this last quarter, and they're expecting revenues to grow by 14% next quarter when NAND makes up a slightly larger portion of their product mix at 25%. To give you a slightly more in-depth understanding of how much NAND demand is growing in the market, check out this chart. We have the number of SSDs, or solid-state drives, in the red line, with smartphones in the gray line. The blue bar shows the bit demand, with the number of total gigabytes going up there on the left side. So as the number of gigabytes of storage of your cell phone increases year after year, companies like Micron are cranking out more and more. And whether the storage is on your device locally or on the cloud on a server somewhere across the country, Micron's providing the storage in both places. Talking of revenue growth is good, but if it doesn't outpace expenses, profits can't be a thing. But like I mentioned at the beginning of the video, we're seeing big time growth in not only the top line, but also the bottom line. Choose any line on this chart and you'll be happy with what you find. Most importantly, free cash flows are growing the last few quarters and are expected to grow going forward too, despite continued capex. I'll touch on this a bit more in a minute, but zoom in on this most recently completed quarter's FCF and see that it's more than doubled last quarter's, though leadership has been pretty clear that they're going to be having a weaker quarter next quarter due to supply bottlenecks for other computer component providers. I'll touch on that more in a minute. Speaking of management, I should mention real quick that the CEO Sanjay Mehrotra used to run SanDisk until 2016 when it was acquired by Western Digital. CFO David Zinsner has been on board since 2018, but was the CFO at Analog Devices, one of Micron's major competitors before that. So the management seems experienced in the industry, and their track record is excellent. I should also mention that Micron just wrapped up a joint venture called IM Technologies with Intel. They started in 2015 to develop and manufacture 3D X-point memory technology, and the deal wrapped up in March of this year. So we have a leadership team and partnerships who are clearly familiar and well established with the industry. But going back to the evaluation, let's take a look at how Micron's continuing to invest. This HyperChart shows us that over the last many years, Micron continues to invest heavily in R&D, which is the key ingredient in competitive and ever-changing industries like this. In a moment, I'll also touch on how market pricing and the cyclical nature of the memory space plays out too. By the way, if HyperCharts like this help you to understand and grasp how a company's doing, follow the affiliate link down in the description to check them out. I enjoy this service and learn a lot from it. Now take a look at the balance sheet where we can compare the assets and the liabilities and see that in their most recently completed quarter, we finished with more than a 3-to-1 ratio, which is fantastic to see and makes this pretty much a low-risk play. On top of that, we have $7.7 billion in cash and equivalents. I'll touch on these inventory levels in a minute as well, but for now, don't sweat them too much. These 4-year average metrics show us even more to be excited about. Revenue growth outpacing the broader semiconductor market, cash generation power that's more than quadrupled since 2014, free cash flows that have roughly quintupled since 2014, and an asset base that's roughly quadrupled since 2014 as well. Micron is kind of a beast, dude. And going along with providing value for the shareholders, they also recently announced a small dividend of 10 cents, and they're working on stock buybacks as well. They've mentioned they've spent about $7 billion in buying back stock and eliminating dilution since 2017, reducing the share count by 148 million shares. In the big picture, it's not huge, but compared to a lot of companies who are like kind of undisciplined with issuing shares, this is pretty refreshing to see. Say what you will about the dividend, but this is usually a pretty solid sign that the leadership is confident in continued margin expansion. I'm more excited about that confidence than I am about the 10 cents. And 47% of their revenues end up hitting the cash flow from operations, and another 70% of that is hitting the free cash flows. There's a lot to be excited about for shareholders. So before we get into a more detailed valuation of the stock price, I wanted to tackle a couple of concerns people have brought up with Micron. Concern number 1. Prices of RAM and average selling prices pretty much have to track downwards over time in this industry. So isn't Micron going to be boxed into a corner eventually? Fortunately, in recent years, price wars between Hynix, Samsung, and Micron seem to have eased, as they apparently have backed off on the price wars. That being said, ASPs have been increasing lately, though we should expect that to taper off in the coming quarter, like the next quarter, and then boost up again following that. Long term, though, everyone's confident things will be fine. Here's a chart illustrating the spot price per megabyte of DRAM over the years, which we can see is also cyclical. So, while demand is cyclical, unit pricing is too. Concern number 2. The industry is really cyclical and therefore it's prone to decreased profitability if you get in at the wrong time. Now this is true, and I'll touch on this a bit more in a second, but it's pretty interesting to see how it works out. Since Wall Street tends to be really like myopic, really like super duper focused on the short term, what usually ends up happening is like an extremely over dramatized rubber banding around the stock price. While the cycles are down, the price doesn't go down in an equivalent ratio. So we end up cycling between oversold periods where the stock is just really, really cheap for what you get, and then back up to periods where it's overbought and you're massively overpaying. The third concern is a bit of a mix between the first and the second. How can Micron keep up with a monster like Samsung in research and CapEx without resorting to like a price war? This combo of charts shows us that while CapEx goes through cycles just like the revenues do, we're not seeing the required expenditures necessarily growing in tandem with output. Basically, even with CapEx numbers staying relatively consistent to what we've already spent in the past, bits of output continue to steadily climb. This means they're getting good bang for the buck on their investments, thus steadily increasing their margins. Additionally, this chart shows the long-term gross margins and how they're hitting higher highs as well as higher lows since 2009. Really good stuff to see. Now, the fourth concern is just a wild card we'll have to see what happens with in the coming years. Cheap Chinese manufacturers are growing in the industry, and we all know they can undercut any of the big players if they want to. The threat is a little bit far off, I think, and the big players can continue to depend on their superior technology for the coming years, I think. Like we saw in the Amazon review of the Crucial SSD earlier in the video, all of my years of working with and building computers, I don't really think I've ever seen the cheap guys earn a 5-star rating with that many reviews. So whether or not the quality can be on par with Micron is something we're going to have to keep an eye out on for the coming years. The fifth concern was the elevated inventory I mentioned earlier. I know Morgan Stanley put out an article a little while ago saying Micron's in trouble because these elevated inventory figures, but Micron was clear is that the problem isn't Micron's problem. If you've ever built a computer, you know that you need a bunch of different parts from a bunch of different makers, including like processor, RAM, storage, motherboard, power supply, a box or a case, and all the other parts like keyboards and screens and all that stuff. So every part in the industry has been bottlenecked. So computer builders are going to have to keep waiting on all the other parts. Micron's doing their part. They're able to provide the RAM and the NAND for their clients, but orders are slowing down while computer builders are having to wait on all the other part makers. This problem will persist in the coming quarter, I think, but we may start to see relief going into summer of 22, I think. Another little thing to love about Micron is the fact that Fortune has named it one of the best workplaces in manufacturing and production. I love a company that takes care of its people and community. Finally, I wanted to take a look at the share price targets. We're sitting at about $70 as of filming, but the street estimates vary massively, from a low of $35 to a high of $165, with a median of $122.95. In my own discounted cash flow model, my numbers didn't range quite as much, but my figures worked out basically in a bummer scenario with a price of $55, whereas in an excellent scenario working out to about $110, giving us a 57% upside from where we're at now. My numbers were a bit more conservative than many because I wanted to be cautious since the free cash flow growth rate lately has been really bonkers compared to, the big picture. Either way, I grabbed some Micron and will start working on a more substantial position going forward. As far as I can remember, I don't think I've recently seen a company that seems this undervalued with such a unanimous buy rating from such a high ratio of analysts. So the jury's basically out on Micron right now. If you want to learn more about the whole industry, including players like AMD, Intel, and Nvidia, please check out my growing playlist of microprocessor companies here. Don't forget to stay generous and let me know if you'll be picking up Micron in the comments section down below. Love you guys and talk to you soon.